We are coming up on year end, which means it is the perfect time to dive into a strategy that not enough high net worth and high earning individuals use in their tax planning and year end strategy. And that would be strategically taking tax gains. Yep, you heard that right. We are not talking about the traditional tax loss harvesting today on the Wealth Cafe, but instead we are diving into taking these tax gains. I am going to take some time today and dive into 4 times when it makes sense to actually strategically take gains in your portfolio. And as we are coming up on year end, now is the time to do this planning, whether you are doing it on your own with a financial advisor or reaching out to us for a second opinion. Now, these things need to get done, whether it's gains or losses, by December 31st. This is not something where you can go back in time and try to do them by April 15th by a tax deadline. December 31st is a hard deadline, so you need to make sure you are acting on these strategies now. So let's dive into 4 different times when it makes sense to strategically take tax loss gains in your portfolio. The first of which is if you are expecting to see a drop in your income next year. And by this, it might mean that you need to rely on some of this income in your taxable portfolio, and you need to pull out this money, take some gains, and live off of these funds next year. I see this happen a lot with clients if they are taking a step back in their role, maybe they are taking a sabbatical, or even if they are transitioning from working in their traditional 9-to-5 job and then starting their own business. What they will do is they will then, rather than having to liquidate an emergency fund or touch other retirement accounts, they will lean on their taxable account, and they will use this as a time to strategically take gains and losses and then rebalance their portfolio and use this time to live off of this money in the upcoming year as they are making this transition. The second occurs is when somebody has a concentrated stock position. Now, this could be anything from you have RSUs to you have company stock that you've been given, or I've also seen this happen in a lot of different cases where people have inherited stock from their family. It's been passed down from one generation to the next, and they want to now unwind some of this position, and they feel as though this is a good year to now decide to take some of these gains and sell them off in order to have this income to use for a variety of different reasons. You now need to then do so and decide, okay, what are we going to be doing with these funds moving forward? Which leads us into reason number 3, which is that you plan on gifting any money away. And now you can also gift money in several different ways. The wealthiest families actually do so in a very strategic manner. We're going to be doing a full episode on this coming in 2026, but one of the best ways that you can actually gift to places like charity or other 501c3 organizations is that you can gift them appreciated shares of stock. Now, there's a couple different rules or nuances that you have to follow in order to make sure that you are appropriately gifting them this stock, to make sure you are gifting them the money in the way that helps you avoid the gains. But this allows you to pass off the gains to them. You are then enabling them to get your donation, and you aren't paying the tax burden, and you are still able to contribute to them, support their organization. And especially if these are organizations you and or your family already contribute to, this can be a great way to help support them before the year ends. Which leads me into my final topic here, number 4, which is that you are using this time to rebalance your portfolio. I see a lot of people who hesitate rebalancing their taxable portfolios because they fear having any taxes or triggering any taxable events in their portfolios. And so what happens is they will have, once again, these concentrated positions, or they will end up holding on to investments that they may not like or that aren't really benefiting them in their portfolios. Now, these are not things that we should fear. When we are doing things with strategy and purpose behind them, we can really use this as momentum to build wealth for the future and use this as a moment to rebalance rather than to sit here and say, okay, how can we pair this with potential losses? What can we do to take these tax gains now and then rebalance into things for the future that align with our goals and our strategy in order to make sure that 2026 and beyond align with everything that we are trying to build and achieve. Now, let's talk about a few ways that you can strategically take these gains. We don't want to just start pulling gains from our portfolio and selling things off willy-nilly. Like I had mentioned a couple times throughout this episode so far, is that you can pair your gains and your losses. This is beyond then just taking losses for the sake of taking losses. This is then strategically pairing. We want to rebalance the portfolio and we want to reduce our tax bill. The other thing that we want to make sure we are paying attention to and having a strategy behind is understanding how long you have owned these positions. If you want to really maximize and reduce your tax bill here, you want to make sure that you have owned them for longer than 1 year, because this is going to allow you to have a capital gains tax rate rather than paying your ordinary income rate. Make sure you pay attention though for you and your circumstances, which is going to be the lowest tax bracket. This is when you want to pull in your accountant, your financial advisor, and work with your team to figure out what positions make sense to sell, and especially to which lots from your different positions. A lot of times we can just go in and say, I'm going to sell 100 shares of ABC, but you can get really nitty gritty and down and detailed and say, I want to sell 100 shares of A, B, and C from September 7th of 2009. And then that way that can also change how much you are paying in taxes. And the third strategy you want to make sure you are utilizing is how you are then investing moving forward. I know I mentioned we talked about rebalancing your portfolio for the future, and you want to make sure you are working with your financial team around what that looks like. Are you reinvesting in the same positions, or are you also using this to then say, where do we see markets moving in the future? Whether that's just 2026 or also in a 5 to 10 year, depending on what your goals are. This is a good time for you to revisit those goals and make sure you are communicating with your financial team what your goals are into the future and what you want this money to be used for if it's not money that you need in the upcoming year or 1 to 3 years. The key to any strategy that you are using when it comes to investments, and especially when you want to have a strategy that you are using at year end, is making sure you are working with your financial team sooner rather than later, and also make sure that you communicate with your team and let them know that this year you want to talk about strategically taking gains in your portfolio, and explain to them why, whether it's one of the reasons we talked about today, whether it's rebalancing, you need some of the cash, you want to unwind a stock concentrated position, or if you want to have some other issue that you have coming up in your life, make sure you're communicating this with them so they can help guide you through this transition, or they can provide some other options for you that they see within your portfolio. And if it's not something they are talking with you about, maybe it's time for a second opinion. Remember that the goal when you are doing any year-end planning like this when it comes to taxes is you want to be focused on paying the overall lifetime lowest tax bill, not the lowest tax bill in just 1 year or in one season of your life. Thanks for tuning in, and we look forward to seeing you next time on the Wealth Cafe.